Running a business is tough. It demands not just your time and energy, but also your emotional and mental resilience. The pressure to succeed can be overwhelming, and the stakes often feel incredibly high. You might find yourself working late into the night, sacrificing personal time, and constantly worrying about the future. It's a heavy burden to carry, and it's okay to acknowledge that. Sometimes, despite our best efforts, businesses fail. This can happen for a multitude of reasons: market conditions, financial missteps, or unforeseen challenges. It's a harsh reality that many entrepreneurs face. The dream you nurtured and worked so hard for can sometimes come to an unexpected halt. It's a tough pill to swallow, but it's important to understand that failure is not a reflection of your worth or abilities. It's important to remember you're not alone. Many have walked this path before you, and many will walk it after you. There is a community of entrepreneurs who understand the unique challenges you face. Sharing your experiences and hearing others' stories can be incredibly comforting. It helps to know that others have faced similar struggles and have found ways to move forward. Many successful entrepreneurs have faced setbacks. In fact, some of the most well-known business leaders have experienced significant failures before achieving success. These setbacks are often stepping stones, providing valuable lessons and insights that contribute to future achievements. Remember, every failure is an opportunity to learn and grow. It's part of the journey. The road to success is rarely a straight line. It's filled with twists, turns, and obstacles. Embracing these challenges as part of your entrepreneurial journey can help you build resilience and adaptability. Each hurdle you overcome makes you stronger and more prepared for the future. The first step is acknowledging things aren't working. It takes courage to admit that your current path may not be leading to success. This self-awareness is crucial for making informed decisions about the future of your business. It's a moment of clarity that can pave the way for new strategies and approaches. Ignoring the problem only makes it worse. Procrastination and denial can lead to bigger issues down the line. Addressing challenges head-on, even when it's difficult, is essential for finding solutions. It's important to stay proactive and tackle problems as they arise rather than letting them fester. Don't let pride or fear keep you from making the tough decisions. Whether it's downsizing, pivoting your business model, or even closing your doors, these decisions require immense bravery. It's natural to feel apprehensive, but taking decisive action is often necessary for long-term success and personal well-being. It's normal to feel overwhelmed and emotional. The emotional toll of running a business can be significant. Feelings of stress, anxiety, and sadness are common, especially when facing setbacks. It's important to acknowledge these emotions and give yourself permission to feel them. Bottling up your feelings can lead to burnout and further stress. You've poured your heart and soul into your business. Failure can feel devastating. The sense of loss can be profound, as it's not just a financial setback, but also an emotional one. It's okay to grieve the end of a chapter that you invested so much in. Allow yourself to mourn the loss and understand that it's a natural part of the process. Allow yourself time to process those emotions. Taking a step back to reflect and heal is crucial. Engage in activities that help you relax and clear your mind, whether it's taking a walk in nature, practicing mindfulness, or journaling your thoughts. These practices can provide much-needed relief and perspective. Talk to someone you trust. Sharing your feelings and experiences with a trusted friend, mentor, or support group can be incredibly therapeutic. They can offer valuable advice, support, and a different perspective. Sometimes just having someone listen can make a world of difference. Remember, your business doesn't define you. You are more than your professional endeavors. Spend time with loved ones, pursue hobbies, and engage in activities that bring you joy. These aspects of your life are equally important and contribute to your overall well-being. Take it one step at a time, and know that brighter days are ahead. The end of one venture can be the beginning of another. With each step forward, you'll find new opportunities and possibilities. Stay hopeful and keep moving forward, knowing that every experience, good or bad, shapes your journey and brings you closer to your goals. When closing a business, you have legal obligations to handle responsibly. This process can be complex and requires careful attention to detail to ensure that all legal and financial matters are properly addressed. It's not just about locking the doors and walking away. There are several critical steps you need to take to protect yourself and your personal assets. Ignoring these responsibilities can lead to personal liability and financial troubles down the road. Unresolved debts and legal issues can follow you long after the business has closed, potentially affecting your credit score and financial stability. It's essential to approach this process methodically and with a clear understanding of your obligations. First, understand your business structure. Sole proprietorships and partnerships offer less legal protection than LLCs or corporations. This means that in a sole proprietorship or partnership, your personal assets could be at risk if the business cannot meet its financial obligations. On the other hand, LLCs and corporations provide a layer of protection, separating your personal assets from the business's liabilities. Your structure impacts how liabilities are handled. Next, address outstanding debts. This includes loans, credit card balances, and unpaid invoices. It's crucial to create a comprehensive list of all your business's financial obligations. This will help you prioritize which debts need to be addressed first and develop a plan for managing them. This includes loans, credit card balances, and unpaid invoices. Each of these financial obligations needs to be carefully reviewed and addressed. Ignoring them can lead to legal action from creditors, which can further complicate the closure process and potentially result in personal liability. Communicate with creditors and explore options like payment plans or settlements. Don't forget about taxes. Taxes are a critical component of closing a business, and failing to address them can result in significant penalties and interest. It's important to stay proactive and communicate with the IRS or your local tax authority to ensure all tax obligations are met. File all necessary returns and address any outstanding tax liabilities. This includes federal, state, and local taxes. Make sure to file your final tax return and pay any remaining taxes owed. If you're unsure about any aspect of your tax obligations, consider consulting with a tax professional who can provide guidance and ensure compliance. The IRS has resources available to help businesses facing closure. These resources can provide valuable information on how to properly close your business and address any outstanding tax issues. Take advantage of these tools to ensure you're following the correct procedures and avoiding any potential pitfalls. Finally, consult with a lawyer specializing in business law. A lawyer can provide expert advice on the legal aspects of closing your business, including how to properly dissolve your business entity, handle contracts and leases, and protect your personal assets from any remaining liabilities. They can guide you through the legal complexities of closing your business and protect your personal assets. This includes ensuring that all legal documents are properly filed and that you're in compliance with all relevant laws and regulations. By working with a lawyer, you can navigate the closure process with confidence and peace of mind, knowing that you're taking the necessary steps to protect yourself and your future. Before closing your business, take inventory of your financial situation. This is a crucial step that will help you understand where you stand financially and what steps you need to take next. It's not just about knowing how much money you have in the bank, but also about understanding the full scope of your financial obligations and assets. This includes cash on hand, assets you own, and any outstanding debts. Cash on hand is the most liquid asset and can be used immediately to cover expenses. Assets you own, such as equipment, inventory, and intellectual property, can be sold to generate additional cash. Outstanding debts, on the other hand, represent money you owe to others and need to be addressed as part of your financial planning. Start by gathering bank statements, loan documents, and financial records. This will give you a comprehensive view of your financial situation. Bank statements will show your cash flow, while loan documents will detail your outstanding debts. Financial records, including profit and loss statements, balance sheets, and tax returns, will provide a complete picture of your business's financial health. Create a clear picture of your current financial standing. Use spreadsheets or financial software to organize this information. This will help you see where your money is coming from and where it's going. It will also help you identify any financial trends or patterns that could impact your decision-making. Next, identify assets that can be sold to generate cash. This might include equipment, inventory, or even intellectual property. Selling these assets can provide you with the cash you need to pay off debts or cover other expenses. Be sure to get a fair market value for these items to maximize your returns. This might include equipment, inventory, or even intellectual property. Equipment such as computers, machinery, and office furniture can often be sold to other businesses or individuals. Inventory, including raw materials and finished goods, can be sold to generate cash. Intellectual property, such as patents, trademarks, and copyrights, can also be valuable assets that can be sold or licensed to generate revenue. Consider using online platforms or auctions to maximize your returns. Online marketplaces such as eBay or Craigslist can help you reach a larger audience and get a better price for your items. Auctions, whether online or in person, can also be a good way to sell items quickly and efficiently. Be sure to research the best platforms for selling your specific items to get the best results. Once you have a handle on your assets, create a list of all outstanding liabilities. This includes loans, credit card debt, unpaid bills, and any outstanding taxes. Knowing exactly what you owe will help you create a plan to pay off these debts and avoid any surprises down the road. This includes loans, credit card debt, unpaid bills, and any outstanding taxes. Loans can include business loans, personal loans, and lines of credit. Credit card debt can add up quickly and often comes with high interest rates. Unpaid bills such as utility bills, rent, and supplier invoices need to be addressed to avoid late fees and penalties. Outstanding taxes, including income tax, sales tax, and payroll tax, must be paid to avoid legal issues and additional fines. Contact your creditors and explain your situation. Be honest and upfront about your financial difficulties. Many creditors are willing to work with you to create a payment plan or settlement that works for both parties. This can help you avoid defaulting on your debts and damaging your credit score. They may be willing to negotiate payment plans or settlements to recover some of their losses. Negotiating with creditors can be a challenging process, but it's important to stay calm and professional. Be prepared to provide documentation of your financial situation and be open to compromise. Remember, the goal is to find a solution that works for both you and your creditors.